Morning, y'all. Quick update. GW, I finally got a weekend off. It's been a minute. Let me take a sip of my coffee. Sorry, I should have did that before I recorded, but you get what you get. Hope everybody's doing well. This is going to be a quick update. I'm going to tell you there was one portfolio move I did from the last part. Then I'm going to answer a question about why I have so much cash, because that was posted on my Instagram. If you guys don't follow me on Instagram, I don't always post financial stuff on Instagram. I do kind of some funny stuff on there too as well. So if you want, check down in the description below. There's a link to my link tree, and all kinds of ways, different ways you can follow me. Because I do a tiny bit more on those other platforms than I do on YouTube, because YouTube is just a little bit more time consuming. Whereas, Instagram or Facebook, I can just throw something up there. Right. So, appreciate all of you supporting and all that stuff, especially on the Amazon and all that good stuff. So appreciate it. So real quick, I ain't got much going on as far as the option world is concerned. This week, what we did was I sold a couple puts, one on CVS. I think CVS is just getting a little too cheap. I wouldn't mind owning it. Healthcare's, it's always an up and down thing, as usual, especially the insurance business, and CVS is big in the insurance business. So we did go to June 21st at a strike of 52.50, and we collected $50 for that one. And then on ABR, that's Arbor Realty Trust, basically a mortgage REIT or mortgage servicing. I went to June 21st at the 11 strike, sold two of those contracts, and collected $60 total. So that's all I got going on. Premium cooking, all I have on is $485 in premium cooking. Okay. For the month of April, we profited $51. Excuse me. In the month of May, we profited $290. Oh, did I go over that? Was that this week? That was probably last week, and I probably didn't even share this because I don't think I did a video last week. So we closed covered call on Verizon for 3 cents, profited $48. Closed a couple of puts right before earnings, or actually, I thought it was before earnings, but it was during earnings. I should have kept these on in hindsight, but I thought earnings was coming up, but it wasn't. But I closed two of those puts, profited $75 there. TNA, the 3X small cap, closed one put there for 11 cents, profited $73. And then TAN closed one put there for 25 cents, profited 94 bucks there. So the month of May is definitely a lot better than April was. So I'm just not finding a whole bunch of stuff that I like out there that I would like to sell, puts on. So that's the reason. And not only that, I don't have the time. If I had the time, maybe I'd find some stuff, but I have a watch list. I look at stuff, few minutes a day, and there's just nothing that I like seeing. So currently my notional means what I will have or what I need in cash to cover the put contracts that I have, and it's $28,950. The only thing I have right now that might be in the money is Realty Income. That might get called away. That's a covered call. 55 strike. It's currently at 55.01. What else do I got? Portfolio moves. This is one thing I did. Someone in the comments, gosh, I forget your name. I want to say Thomas Frugal. Dang it. I don't remember off the top of my head. Jay. He suggested looking at rdvi as opposed to PEY, which is what I have, the Invesco Pay ETF. They are different indexes, though, so you can keep both of them if you'd like. This one is a rising dividend achievers index. Now, the PEY one is the Dividend Achievers Index. So Rising Dividend Achievers Index, and then PEY is Dividend Achievers Index. So there's a difference. The RDVI from First Trust has a lot more lower yield, higher growth, higher dividend yield growth stocks in it. Does have a high expense ratio, 0.75%. And then it sells call options. Now, I don't know, I haven't looked at it, but I believe they're doing, I just read it. They're selling call options on the index or ETFs that track the S&P 500. So they're not selling call options on their holdings. So what I ended up doing, let's go over here. My XLU ended up being called away at like $66 or something like that. And it, of course, kept going up. But I took about half that money and I bought, excuse me, I bought 128 shares of RDVI. I think I put $3,000 into it or something like that. What that did was put $3,000 from the 6,600 from XLU. I put in about half into RDVI and then half went into cash. And that maintained my dividend income as well, because I have an average monthly right now of $675.03. So that's not horrible. My cash, I want to address it. Let me address that real quick. A different PEY thing real quick. You look at the top holdings. You'll see in PEY, they have a bunch of old school, high yield stocks, right? Low growth, arguably in some dead industries like Philip Morris and Altria, being 6-7% of the fund. A lot of troubled, I'd say, but they're still great companies, right? 3M, I don't think they're going anywhere. Pfizer, I don't think they're going anywhere. Verizon, I don't think they're going anywhere. Exception, Walgreens, Boots, they might be going somewhere, not somewhere good. But then if you look at the RDVI holdings, just look at the top 10. I'm sorry, I didn't zoom in on this, but you got some bigger names, right? American Express, Williams Sonoma, Synchrony Financial, Qualcomm, Bank of America, Apple, Exxon Mobil. I think I saw Nike in there, Microsoft. So they have, as long as they don't get stupid with their calls on the S&P 500, this ETF should definitely outperform PEY. I mean, that's a no-brainer. Just for the fact, as long as they don't get stupid with their calls, just for the fact of the stronger growther. I just made up a word, y'all. Growther. More growthy stocks of the Dividend Achievers, the Rising Dividend Achievers Index. Okay. So I think that's it for that. Next up, my question was, why do you have so much cash? Actually, it's gone down. It's up to 37. I think the last video I did, it was like 42%. So it's gone down. I just can't find places to put money. Number one, I find it hard to find places to put money. Okay. Number two is I grew up poor. Okay. And you don't know the comfort of that. I know a lot of people say, oh, you just invest it all, but there's a comfort in having cash for someone that was poor, lived hand to mouth for most of their lives, right? And to see that cash there, it's pretty comforting, right? And my wife is kind of the same way. I'm really a low volatility guy, as you can tell. I mean, look at this stocks. I'm just, there's income stocks, there's preferred shares, bonds, low growth like Verizon and Pfizer, and closed-end funds that are income-based, right? My growth is only from QQQM, which is 4.6% of the portfolio. And then Bros, Dutch Bros, made a really big contribution this week because they beat earnings and it went up like, I don't know, 10, 20% or something like that. It went up almost $10 in this past week. So that helped because I got like 300 shares in that. So that really helped. Other than that, I don't know. Did I cover everything? I think I covered everything. Got rid of XLU, bought rdvi, reduced my cash balance. That's it. Sold a couple of puts, and that'll do it. So if you'd like to support the channel, down below, links, comment, share, like, all that good stuff. And hope you guys have a good week. And maybe if I have another weekend off next week, I'll have another video. So you guys have a good one. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.